Hi there, traders. This is Brad Gilbert with the FX Market Insight for Wednesday, the 17th of April. All right, now a few little IT issues this morning. Haven't been able to get onto the site, so better late than never. Now, let me just run you through. There's been a few major releases out, and we need to get on top of these. So just having a look at the major currency pairs, there's been a little bit of activity. Dollar yen still cruising to the top side. Dollar Swiss also now breaking to the top side. Aussie, just after the batch of positive Chinese numbers, has kicked in above 72 the figure, although it's just pulling back a bit now. And also the Kiwi, earlier than that, we had the Kiwi CPI numbers, which came out much weaker than expected. And we do have the Kiwi dropped off 100 points. It's just bounced back with those Chinese numbers. Here's the Kiwi CPI numbers, 0.1 versus, let me just move that a bit, 0.1 versus 0.3 and 1.5 versus 1.7. So Kiwi economy slowing down very quickly. They don't have a lot of numbers. This pretty much confirms to me that they'll be cutting rates pretty soon in New Zealand. Now, there's been a huge wait for the big data drop. They've been calling it on the media outlets with China. There's a whole batch of data here which was dropped. Urban investment still up, well, 6.3 as expected, but it's higher than previous month. Industrial output much higher, retail sales much higher, and GDP coming in 0.1 above the forecast. But they do seem to be getting quite excited about that. Now, for those traders who are watching this, I mean, you may have seen dollar China. You're going to love it when the data's leaked. This is probably out. The yuan started moving up, or dollar yuan started moving down with the dollar falling about half an hour, 40 minutes before the data. The Aussie jumped up about 10 or 15 points about 20 seconds before. So the data was in the market before the actual scheduled time. And this is not uncommon with Chinese numbers. So if I just give you a look at the, clear that up and give you a look at the charts, there's a fair bit of activity right now. And it's, as I was saying, I apologize for the delay in this video, but there wasn't much we could do about it. Once IT goes down, it goes down. So you can see the Aussie breaking higher here through 85. Hasn't been at all clean. It's got up to about 72.05 and just pulled back to 90. That's a nice little bit of a retracement. But the fact that this was in the market before the actual data was due messes up the opportunity a bit. Now, Kiwi was up around sort of 67, 60 odd on the CPI release. There's no liquidity in this thing. It looks like an easy trade, but it was very difficult. Down to 66, sort of 70 or just under there. It's now just bounced back up to 30 on the stronger Chinese numbers. And you know what? I still think there's a chance we could be getting short Kiwi up around 67, 50 or 60 if the sentiment from these Chinese numbers continues, right? Yeah, look, to me, I want to get short Kiwi, but I can't get short here just at the moment because it's, we haven't seen the fade of sentiment just at the moment. Dollar yen, it's just messing around with an old resistance trend line and the cloud. If anything, trading sideways. It sort of looks like it doesn't know what it wants to do. And euro, bit of sideways. Once again, it's moved up about 10 or 15 points on the back of the positive Chinese growth numbers. Not as much as the Aussie, but it sort of lifts the spirits of the ECB, which looks like it's been reported 3 or 4 ECB officials are all coming out saying they should be a lot more dovish because the outlook has been a little bit rosy for what is actually happening there. Sterling, even though it's breaking down through this short-term support line, it's still within recent ranges, and so is dollar CAD. All right, so this is, as I said, I've been waiting for today all week, as in this Chinese numbers. Originally, the GDP figures at the start of last week were scheduled for Tuesday, but they're now set down for, today with everything else. So just coming back to look at the market conditions, I've just got to update that. Well, the currencies do have a little bit of direction. The US dollar doesn't have direction, but we do have the other currencies moving around. Chinese numbers impacts Aussie and Kiwi, and peripherally, if I can get that out, the other currency pairs that correlate with it, like euro and sterling. Euro is slowly moving up, but you do have that breakout in dollar yen and dollar Swiss to the top side. The core market drivers, well, okay, China and the US situation, and also Brexit. Now, these numbers really is a bit of a shun. Well, it's a bit of a, shun back towards Trump. But, it's a bit of a pushback. Strong Chinese numbers. It means these tariffs that they've been putting on China haven't hurt them as much as the US thought. So maybe we see Trump come through with a few extra sweeteners to make sure the pain is felt over there. So what have we got looking at today? Well, these Chinese numbers are already in the market. The sentiment is up. Now, the Aussie and Kiwi sentiment fundamentally is down. So to me, this is a bit of a short-term trading opportunity. I think I like the Kiwi lower after those CPI numbers, but it's hard. You just got to wait for this initial thrust of sentiment from the Chinese numbers to fade, and then I think we'll see the Aussie sort of drift back into the range. But I think we'll see the Kiwi lower, catching up with its fundamental perspective from a few hours ago. Now you come back into the rest of the trade day. We've got some chunky stuff coming out now. UK CPI figures. Now I'm not really sure if the sterling is ready to behave with the fundamentals. I will be watching this one. It is an important release, but the whole Brexit situation, it's sort of still lingering in the background, and I'm trying to work out whether the sentiment from the fundamentals is going to start coming into sterling again. It may well do with these CPI numbers. Dollar CAD, okay, it's sort of just meandering sort of mid-range at the moment. This thing will kick into gear big time when the CPI data is released. And keep an eye out for the Bank of England Governor Carney speaking later in the European day. And that's pretty much it for Wednesday. All right, so as I said, it's a bit of a shame I didn't get to give you a bit of a rundown before these Chinese numbers. I couldn't do much with the screens, but I was watching the currency pairs and looking at the price action. I mean, there's nothing that really bugs you more when you've got a currency pair. And a lot of people ask me, why isn't China a part of the international community and the currency? Well, it's because it's dodgy. There's no structure in their financial system. It's run by the government. Data, like this thing was sitting around 67 or 6.7120. Okay, next thing you know, it's down here around 60. It's dropped 80 points leading into the numbers, and then the numbers, of course, come out strong. It looks like everyone who's involved in the Chinese Bureau of Stats has given all their family members and business colleagues the heads up there. So that does, as I said, slows down the move to the top side. I don't know if the Aussie is going to keep going much further beyond 72, the figure. It's looking a little bit fatigued at the moment. So all we can do is factor that into the equation for what's going on right now. And as I said, that doesn't really fit with the fundamental equation for the Aussie. When these things start to roll over, I expect the Kiwi to drop back down below 67, the figure. That's probably the trade for me. And we'll go from there. So now, if you've missed all that, tune in for the UK CPI data. And in the North American session, that Canadian CPI data is going to be the main game. So still plenty to play for on the 17th. All right, guys. All the best. We'll see you in the 247 trade zone if we've missed you already. Cheerio.